Good afternoon, everyone. Phil Simons here with Columbia Grain and your Friday afternoon weekly grain market recap. Well, another week is in the books and big price movement continues to be one thing that stays the same. Markets were fairly thin in overall volume on the day as position squaring took center stage before a long 3-day weekend for the markets. And just a reminder, the markets will be closed on Monday, June 20th. With that, the weather maps came into play pretty aggressively today as well, taking all of yesterday's gains away and then some, especially in the wheat pits. And we have definitely entered the weather market as current and extended forecasts were the highlights on the week, driving futures prices rampant once again. Not to forefront, the Russia-Ukraine war continues to be the driving factor in the headlines, reactions on the day-to-day front as well. But for now, the weather markets are favorable for wheat harvest ahead, and with early reports of quality that is actually a little bit better than expected, along with some yields that are also better than expected initially. But the final count is still ahead of us and how it will ultimately affect the prices going forward for everything, for corn, for wheat, and for beans. But the stocks continue to be tight, but there is always another harvest on the horizon that will bring the product to market. And really to highlight this, I do want to take a look at the price action that we've seen for the year to date in new crop, especially for corn, wheat, and soybeans. So I'm sharing my screen with you again here. And again, starting on the left-hand side of the screen, let's take a look at what we've seen year to date in price action on new crop, corn, wheat, and soybeans from a future standpoint. So on the left-hand side, you can see the year-to-date range in the blue bar for December corn. The year-to-date price range has been a whopping $2.24 in corn. And the year-to-date change that we've actually been able to hold on to in December corn has been $1.83. We shift gears a little bit and we look at where November soybeans, the year-to-date range and the overall trading range has been $3.10. And the year-to-date change, we've been able to hold on to $2.62 of that range or that upward movement. Next, looking at Kansas December, we see just a massive year-to-date range of $6.13. But the year-to-date change, what we have been able to hold on to year-to-date has been $3.09. So roughly half, right? Roughly half of what we've seen on the overall range. Similar fashion, looking at Chicago D-Sweet, we see the year-to-date range just massive. In 6 months, we've had a range of $5.39. But again, the year-to-date change, we've been able to hold on to $2.89 of that overall range. And again, lastly, if we take a look at Minneapolis Dees, we see the overall year-to-date range. Again, just massive numbers, $5.50. And the year-to-date change, what we've been able to hold on to has been $2.72. So really, the bottom line continues to be when we look at these types of numbers, that the knee-jerk reactions that we've seen really being driven by a lot of the war in Ukraine, tight stocks, just uncertainty in the world in terms of overall physical movement of the commodity and primarily wheat, along with corn and soybeans. But just the volatility has just been extremely high this year, and the knee-jerk reactions that we've seen to date will continue to be expected going forward, as we look at what to anticipate moving throughout the rest of the year. But we do need to remember that, again, right, we do have another harvest on the horizon. How will that actually impact a lot of the price movement as we go forward? So again, be sure to get a hold of your Columbia Grain merchandiser to get your orders out there working, and also get some additional information on some of the new accumulator type contracts that we have out there as well. And remember, the perfect strategy works every time until you use it. Have a great weekend, everybody, and we'll talk with you next week.